Great. Okay. Okay, welcome everyone. We are on day 4 of Catalyzing Change Week here at Catalyst Now. And today we have the evolving social finance sector with Nishant, who will be our host and our speaker. Yeah, can't wait to start. We have a quick video from our member.
Welcome to day 4 of Catalyzing Change Week 2025. The UNHCR in April 2025 recorded that there were approximately 122.1 million forcibly displaced people in the world. How do we provide support services, assimilate refugees into societal systems? How do they afford basic rights, even as they flee widespread violence, hunger, and conflict? Our theme for today reflects the issues around civic participation, peace, and justice in the journeys of refugees and migrants. Change is only lasting when people have a voice in shaping it. Civic participation is about more than being present. It is about building systems where every voice carries weight and where communities can take part in designing their own futures. Peace and justice are the foundations on which all progress depends. They take root when dialogue replaces division and cooperation overcomes conflict. And in the stories of refugees and migrants, we see both struggle and strength. Displacement tests resilience, but it also reveals new possibilities for innovation, solidarity, and renewal when dignity is protected and contributions are valued. This day invites us to listen deeply, to question what justice truly looks like, and to imagine how inclusive societies can be built stronger and more united. Welcome to the sessions presented by Catalyst Now.
Perfect. Okay, awesome. So just some housekeeping for the session. We just ask you keep your video on. Change your name and your company so we know who you are. Feel free to introduce yourself in the chat as well. Obviously unmute when you are speaking. And if you have any problems or you have any questions, feel free to reach out to me or Inez. And most importantly, do enjoy. And for those of you that are joining us that are not yet Catalyst Now members, we will put the membership application form link in the chat. And we welcome you to please join our movement. So now I'm going to turn it over to Nishant, and the floor is yours.
Thank you. Welcome to everyone. Thanks a lot. I've seen very few people have joined. I think we had a lot more, but confirmed. So what I'm going to do is today, I'm going to start directly with the presentation. I'll just share my screen. 1 minute. And we'll start with the presentation right away. I'm sorry, this was just... So today, what I'm going to be speaking about is evolving sustainable finance. This is going to be a small bit of what I've written in the book. So just give you a brief introduction. The middle road is the EdTech media company which I have launched. So this is a brief about my profile. I predominantly, before this, I worked extensively within the financial services sector. Did my master's from University of Michigan Ann Arbor in public administration, and my MBA is from CEIBS and from SIBM. Now, this is my book. Recent book is Global Development Impact. It extensively talks about social financing mechanisms within the development sector. Now, just to give you a brief, it's written like a narrative style. And that's the whole idea of the book, is to sort of make it more interesting for a lot of audience, because it has got a lot of topics which could people find sort of a bit more complicated, but it's made it very easy. It's in carbon financing, climate finance, blended finance, sustainable finance, structured products, and social financing themes within the development sector. So what's so interesting about this book is that it talks a lot about case studies, quizzes. It talks a lot about development economics. Apart from other things, it talks about policies within the ESG space. Now, I'm going to touch a bit about that today. So when we talk about, today the world has changed. Dollars, any sort of money which you are impacting is like making a huge difference. That's whole idea is to either reduce carbon emissions, empower communities, or build a more equitable world. Now, that being said, sustainable finance has become mainstream. Now, in today's presentation, we explore ESG principles, sustainable investing, and I'll just cover one. Predominantly, we'll go into sustainable bonds. We're not going to a lot of different products because we don't have so much of time as of today. And it will be great if you want to. What I'll do is, like, maybe after every 4 or 5 slides, I might just give you the floor, and you can always answer the questions. Now, let me ask you first thing. So, when we talk about what do you think is the global annual issuance of green social sustainability and sustainability bonds in 2024 alone? Anybody guesses? Okay, so it is about more than $1 trillion. So that itself shows you how it's expanded. Now, when we compare it to the global capital markets, whether it's an equity which is about $100 trillion or bond market which will be a bit more, it's still small. But if you look at it, it's actually expanding a lot. So today, what we are going to talk about, we'll talk about selected milestones. We'll talk about type of instrument and strategies used within sustainable development, selected champions. Then we'll talk about global sustainable investing asset allocation, how it happens. We look at a couple of key policies, which is EU taxonomy and SFDR. Now, SFDR is very important in financial sustainable finance space. That's why I specifically kept it. We'll give an introduction to sustainable bonds and then various types of sustainable bonds, and then sort of a case study, which I have covered in my book. Now, when we look at the global sustainable investing assets under management, if you see between 2016 to 2022 in billion dollars, you can see how the various countries are placed. So these are some of the countries which were accessible from the GSI report. Now, when we look at the US market share has gone down a bit. This is predominantly because of change in method, how things are being calculated. So this is to just give you a brief. Otherwise, the US share would have been much higher. You can easily see, which is in the sort of the red shade. But one aspect which is increasing over a period of time has been Japan. So if you look at Japan, that's been a consistent increase. The percentage increase in Japan has been very consistent, always been increasing. Now, if you look at when we talk about sustainable finance, what were you talking? So IMF defines sustainable finance as incorporation of ESG principles into business sessions, economic development, and financial strategies, investment strategies. So this is a typical description of sustainable finance. And when we talk about what is ESG, so E would be environments, S will be social, G will be governance. So these are some of the themes. Whenever we talk about environment, we always know about climate change. We are always talking about climate change. Then we are talking about biodiversity. We are talking about natural resources, efficiency management, waste management, transportation. So, for example, green buildings, clean tech. So these are the various topics. Clean tech has been a very, very important topic across the globe. So that's one. Now, when we talk about social, what are we talking about? We're talking about underserved markets, or you're trying to help marginalized communities. Now, this itself becomes a huge topic globally. Now, if you look at social aspect, although a lot of people would say environmental is where the sustainable bonds are being used, but social has become one of the major markets where a lot of change is coming in. And then, of course, governance has always been there. It could be different kinds of regulatory management, accounting disclosures, data privacy laws, or how the board is governed. So this is the third aspect. Now, why is global development sustainability is going mainstream? Is because it's now become one of the most important tools, sustainable finance, in order to come out with the socio-economic and environmental outcomes. These are interventions which you will do over a period of time to get a change. Now, social financial innovation is also using various types of innovation known as blended finance. Blended finance has been mainstream, has been there for a long period of time. But since Addis Ababa agenda, which happened some time back, this has become, it was then used as a tool to get private capital within the ecosystem. In a nutshell, you could say sustainable finance is mainstream both with the retail and institutional needs. So when we talk about sustainable finance, so these are some of the type of instruments or strategies which could be used. So when we divide across asset classes, we make it in equity, we make it in fixed income, we make it in alternative investments. Now, if you book, of course, I have expanded a lot in ETFs, smart beta strategies, how it's being used. But today we're not going to be discussing that. Just to sort of give you an overview of what are the equity, capital equity markets are there. Then you have fixed income markets. Now, sustainable bonds is what I'm going to be talking about. Green sustainable linked loans, this is a very similar thing which you talk about. Securitization is part of structured finance. Now, this is being used in America a lot, also globally. China has used it within the green market. Even India has used it a lot within the green market. So, this is, but we're not going to be again discussing this. We'll talk other things which are being used is like masala bonds, which is being used in India, or different kind of things. You could have ETFs linked to fixed income. You have project finance, revenue bonds, venture funding. Venture funding has become sort of very important recently for startup ecosystem. As a matter of fact, it's used a lot in America. In India also, it's catching up. Now, when we talk about alternative investments, you have social impact bonds and development impact bonds. There is also a course on impact bonds on the middle road, which I've made. So if you go through the middle road, although right now outreach is stopped, these are like results based financing instruments. They were one of the first innovation which has come. So what's good is it is a multi party wherein public private partnership is used to fund outcomes, and these outcomes of course are linked to certain KPIs, like you have key performance indicators, or you have key targets, and if you meet those targets you get a positive outcome. So this, then you have impact investors. So impact investors become very important because when you talk about VC, seed, and angel investing in mainstream, when we talk about social, in terms of social financing, we always use as impact investors because they look at both financial and social return. So the whole point of impact investors is to fund companies which actually are making a change, which are impactful or they're impact driven. They have an agenda to make a change for the better within the society. It could be across anything. Then you have green REITs. So this just to sort of tell you about okay. So here, let me, before I continue, is anything you have any doubts? Okay, so let's go to sort of the selected champions. So these are some of the selected champions. Of course, United Nations becomes the one of the biggest things. OECD, Chris is majorly involved. Climate bonds initiative. This is one of the leading sort of champions within the green space. You have global impact investing. You have GIN. You have so you have these various kinds of champions who are making a change through various ways. It could be either multilaterals, it could be bilaterals, it could be basically non-profits, it could be policy making, so different kinds of groups which we have here. So when we look at sustainable investing assets by strategy, we see that, so this is the breakup if you see over a period of time. You have corporate engagement and shareholder action, which is one of the largest right now, wherein you directly want to make a change at the highest level. You have ESG integration. Now, this is one of the most important and most popular strategies. Basically, it's systematically how you're going to be including ESG factors into traditional financial analysis and investment decisions. Now, this is one of the most important strategies which is being used now within the asset management space. It's basically could be value driven. It looks at a lot of financial materiality, but not necessarily it could be values driven. Now, negative and exclusionary screening is something which is very known. This, like, don't invest in certain sectors like gambling, tobacco. So this is like you exclude certain sectors. This becomes pretty simple. Then you have norms based. Norms based is, of course, you're trying to sort of base it around the certain parameters. For example, norm based could be the UN, your screening companies against some international norms and standards, like the UN Global Compact. It could be OECD guidelines for multinational enterprises. or it could be ILO conventions. So just to give you an example, so these are certain rules and regulations which you rules-based sort of screening, where you're already looking at certain international benchmarks. Then comes sustainability investment investing. Now this actually looks at sustainable outcomes, basically clean energy, it could be clean tech. So these are clearly looking at particular strategy. Now you have positive or best in class screening would be, I'll pick up the best companies in that particular sector. It could be like, I mean, top 10% of the best companies which predominantly I would like to invest. So this will be one of the most innovative driven strategies. This is being used now by MSCI. A lot of companies are using this to churn out the best income. They could be best among their ESG practices. So just give you an example. Now you have impact of community investing. So this particular investing part would be social impact bonds, could be impact investing. Is basically you are community based. Is basically you are trying to sort of fund companies or interventions that have holistic outcome in terms of making it more inclusive. For example, I could give you an example. Could be affordable pricing. So you affordable banking, it could be affordable housing, so that more people use this particular type of investing. So this is done through various ways. It's very popular in the US. Now this is just to give you a breakup. Now you see, if you look at various breakup, you will see the corporate engagement and shareholder action is actually got a huge percentage in United States or even in Japan. That's where if you use ESG integration, then you okay, I'll come to this question later on. Yeah, it does microfinancing. So that's precisely correct. Sustainable finance, which I talked about, the strategy which is impact investing, microfinance solutions will be part of it. I hope it answers the questions. Okay, so there was just one question which I was answering. Uh, So when I talk about impact and community investing, microfinance will be a part. Grameen Investment Bank, that's an excellent example of impact or community investing. So just to give you an example. Now I'll ask you a question again, and I'll wait for your answer. Which of the following, and I've covered this up right now in the presentation, which of the following is a champion of impact investing? So whenever I'm talking about impact investing, think about it as investing where you are looking at both financial and social impact. So it's sort of right now when you talk about social enterprises, you look at companies or you look at companies who both are making a change within the ecosystem, but at the same time are sustainable. They have to be sustainable, so they have to have a impact investing. So tell me which of this is a champion of impact investing. Yeah, exactly. So it is right, Kritika. Your GSI. So that's correct. So GSI is the right answer. Now let's go. When we talk about sustainable finance, we need to be very, very interested in some of the key milestones. Now these are just selected some of the milestones. The milestones are huge, and I've covered them extensively in my book. But let's look at one of the major. One of the major was the first green bond launched by EIB. I think EIB is the largest multilateral bank, European Investment Bank, by asset size, from what I know. So the first green bond was launched in 2008. As a matter of fact, the World Bank launched in then 2007, sorry, and 2008 the World Bank launched. So sort of back to back we had one of the things. Then green bond principles were launched in 2014. Now this another major thing is because you now had a framework of how we will categorize green bonds. So green bond principles, and we'll see what these principles means as we go forward. Similarly, social bond principles were launched in 2017. Then sustainable linked bonds is a very type of popular bond. It's actually used by corporates being used. Then I think one of the best policy ever done is actually the EU. EU is a champion of driving some of the best policies in the world. So so if you look at investments within the green, clean tech or within the renewable energy place, so it will be China which is leading, and I think America would be, or Europe would be right across the second thing. But if you look at the policies, then EU is the most dominant country in the world, which comes out with some of the most fantastic policies. So they came out with EU taxonomy, they adopted in 2021, and SFDR was also launched. So when we talk about EU taxonomy, what we talk about now, this is a very important things, because they're the first ones to come out with a clear and science-based classification of which economic activities are environmental friendly or sustainable. Then they came out with this objective, which is like climate change mitigation, climate change adoption, water and marine resources, which should be targeted, circular economy. Circular economy is something which EU was one of the first ones to sort of come out and focus on, pollution prevention and biodiversity. So I've covered, as a matter of fact, a lot of biodiversity in the podcast from the Middle Road. You could also look at it. So just to give you an example, climate change mitigation, when we talk about, is any policy which is going to remove the carbon emissions from the environment. So it could be clean tech. When you're talking about climate change adoption, it is something which you are actually trying to adopt to this. So you're not sort of, for example, if a city is prone to a lot of floods, you're making a bank or trying to sort of take precautions against it. So this is the difference between the two. Now, when we look at EU taxonomy, it had another thing: do not significantly harm principle. So it is that you have to be very good in one of the core principles which you talked about. Either you should be very good in one of the six environmental objectives. You have to at least contribute substantially towards one, but you cannot harm. That doesn't mean that you're going to harm of any other objective. So if you might be very good in one objective, or you might be very good in three objectives, but if you're harming one, then actually you're not a part of the toxin. You sort of come down the ladder. Then you should have minimum safeguards. Companies must comply with labor and humanitarian rights governance standards. So these are OECD guidelines. And then it sort of applies to market participants. So if this mandatory for certain companies under SFDR. When we talk about NFRD, it is non-financial reporting directive, which companies had to report about the ESG activities. This was before. The successor is, of course, CSRD, which is Corporate Sustainability Reporting Directive, which took over from NRD. It's much more comprehensive. It applies to a lot more companies, whereas NFRD was a bit of restrictive in its capacity. So when we talk about SFDR, we talk about Sustainable Finance Disclosure Regulation. What it is like. So what we need to understand is it's a framework which discloses measures that would enhance accountability, transparency, and integration of adverse sustainability impacts. Now this is very important. Adverse sustainability impacts in investment decisions. How they are actually, how your decisions could be very bad for the investment decisions, or it could be good. So you take both sides, how ESG is making things better, or how it is making bad. So that's why adverse is where you need to understand where things are going wrong. So when we talk about financial services, there are two major actors. One is financial market participants. These are asset managers like BlackRock. Just to give you an example, it could be alternative investment fund managers like hedge funds. This is just private equity. Just to give you another example, and then manufacturers of pension funds. Now, pension funds is one of the largest. So when we saw Japan rise in ESG investing, that's because Japan was one of the first. Japan pension fund, one of the Japan's pension funds, was one of the largest in the one of the largest or the largest in the world. Incorporated ESG practices. So that's how the sustainable investing went up. Even if you look at CalPERS and one of the California pension fund, that is, I think, also sort of started incorporating. So that's been a game changer. Now, when we talk about financial market participants and financial advisors, these are two sort of distinct entities. Now, disclose, you have to make sure there's an integration of sustainable risk and principal adverse impacts in decision making at both the entity level and product level. We need to know how the decisions are impacting, whether anything a company's carbon emissions, how they're going to be impacting uh, the decision making, and how they're going to be also impacting the products. Now, this is one of the reasons this has been, is because there's been a huge rise, like I said, in the appetite among participants or investors to invest in what is known as responsible investing. You shouldn't call it social responsible investing, responsible investing the way you want. Now, these disclosures must be aligned with MiFID and insurance distribution directive. So these are some of the regulations which will not go in deep into those. But we look at what's very important in FDR, SFDR. So there are three articles. Article 6, which focuses on disclosing sustainability risk. Now, Article 8 is basically if your information, how your investment product aligns in ESG characteristics. But Article 9 is where the investment products have incorporated a investment objective. Now, this is very interesting because this Article 9 is actually a clear-cut guide which gives you the core ESG theme. This is the highest of all the classifications of your product. Now I'll give you a question again. I would like to sort of make it more interactive. Now, companies are part of EU area and its business relies on significant carbon emissions. Now, according to you, the EU SFTR, this is an example of principal adverse effects, wrongful action of partners, or legal risk. What do you think is the answer? Okay, so this is an exact example of principal adverse effect. So when you look at, there's a significant carbon emissions. This is actually going to hurt. This is a adverse impact. Is going to have an adverse impact at both the entity level and the product level. So this is how the EU taxonomy is defined. Now, before I continue, I just wanted to check: am I going too fast, or you think this is okay? And I'll also take one of the questions from I have regarding social impact bonds. My understanding that it requires two kinds of funders: investors who are willing to take impact or and willing to pay. I've been thinking about social impact on smart contracts. Okay, so I really do. So social impact bonds or development impact bonds, one of the key things is it's a public-private partnership is who's funding. In social impact bonds, the government is funding. In development impact bonds, which are actually implemented in emerging markets, funder could be the third kind of funder could be a donor or a foundation, but not a government. So that's one of the major differences. And they both rely, one of the first social impact bonds was actually implemented in UK. They both rely on results based financing. That is, I want to see if I'm going to fund you a project, how you're delivering it. And that could be a simple statistical measure. I could give you an example like Educate Girls in Rajasthan was the largest development impact bond ever implemented in the world, and from my knowledge. And they wanted to see how the participants or how students are performing well. This could be like how they are attending or how their scores go up. So this could be as simple statistics as that. Am I being able to answer you? Hello. I mean, you're free to speak, and I'll then start with the second part. I just wanted to make sure that I'm not going very fast, and you're able to. Is it private fund? So I said social impact bonds. So it's the impact bonds are basically public-private partnership, which is like the 17th Sustainable Development Goal, wherein you are actually bringing in private capital to fund interventions within the social. Let's talk about social impact, social sector. So in terms of social impact bonds, the funder is the government, whereas in development impact bonds, the funder is could be an entity like uh, 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 a donor or foundation. Okay, so let's now go ahead with the presentation. It's just, yeah, okay. So when we come here at different types of bonds. So like when now I'm going to go deep dive into sustainable bonds. Sustainable bonds could be green bonds, blue bonds, social bonds, sustainability, ESG, SGD, and ESG bonds. It could be sustainable linked bonds and social impact bonds, which I discussed about. So there are a part of major tools which are now emerging. They were listed on stock exchange, on London Stock Exchange. It focuses on either environment, social, or both the themes. It could be also governance. So when I'm talking about ESG, I've not written here. ESG focuses on governance bonds. So these are backed. So they are backed by these principles. So when we talk about these principles, what we talk about, what do we mean? So the principles are given by ICMA, is the largest champion in this space, and this serves as a leading framework for sustainable finance instruments. Now, these principles could be for green bonds, it would be green bond principles. For social bonds, it would be social bond principles. So for sustainability, it will be sustainability bond principles. And for sustainable linked bonds, it would be sustainable linked bonds. So it depends on which bond you are, and if they are going to be, these are voluntary guidelines, and they should be following these standards to be categorized in that particular field as a particular bond. So when we talk about these bonds, what we talk about, there are four things which are very important. One is the use of proceeds, how you're going to be using the proceeds if you raise the funding, the process for project evaluation and selection, management of proceeds, and reporting, how you're going to be doing the reporting. There are a lot of times the second opinion is also taken by companies, so that the process becomes, which is actually very important, so that it gives you a lot of accountability in particular part of it. So when we talk about ESG bonds, it incorporates governance considerations which I talked about. That's why I had particularly written about it. And they have to adhere to relevant bond principles. So they could be either, when we are talking about ESG, special type of bonds, they can either be sustainability linked bonds if they comply with sustainability linked bond principles. So they could also be classified as that. So it depends on what sort of classification is given. So ICMA has got a very detailed reporting on this particular space, and you could have a sort of an example on it. Now, this is to give you a brief about how the bonds issuance has been over a period of time. You can see that the green bond is the most dominant of the bonds, of all the bonds. In 2025, there were hardly any, there's not much of data, because this is data is till a particular month, and I think I've not sort of written that month, so that's why the peak. But actually, if you look at the GSS insurance, which is green social sustainability and sustainability linked bonds, it's increasing over a period of time. So just to give you data, this taken from ICMA. And so as do you have any questions? Okay, now I'll just share the next slide. This is cumulative GSS plus bonds. It's issued in $1 trillion. So you can see that the green has been the most dominant space. Now, this data might be a bit different from the other data, because here data I've taken from Climate Bonds Initiative. So ICMA and Climate Bonds Initiative have their own type of classification. They are could be very close in terms of classification, and the data might be a bit different, but it will be very close to each other. So if this has been from a report that's $5 trillion of climate investment annually by 2025. So what is green finance? When we talk about green bonds, these are the most important of the bonds. So these are bonds which target projects related to climate action. Like I talked about, it could be climate mitigation, reduction of carbon footprints, climate adoption, which could be how you adapt to climatic changes. The the theme broad. It could be the themes like buildings, energy, waste. They follow green bond principles. Then there are also loan. So when you are taking a loan, if it gets classified as green loan principles, if it's then it comes under the green loan segment. Then there are climate bond standards and country specific. They can be very country specific and climate bond specific, right? So this is just to give you a brief of what this whole thing about. Now, climate London Stock Exchange is the first exchange to allow green bond trading, just to give you for example. And blue bonds, which are a subset of green bonds, focus on sustainability of the marine ecosystem. Now, blue bonds could also be part of green bonds, but blue bonds have now come up really big recently. And one of the reasons is that this is becoming one of the most important areas: biodiversity, coastal preservation, and they have now come out in a separate way. But blue bonds could be a part of green bond as a subset, depending again if it follows the green bond principles. So these are some of the eligible green projects. Now, these are, I wanted to be very specific. When we talk about green projects, what could they be? It could be renewable energy, renewable efficiency, pollution control, prevention, environmental sustainable management of living, education, various kinds, climate change, circular economy, green buildings. If you look at the focus right now around the world, has been a lot on green buildings. So if you look at multilaterals like IFC, or even, I mean, the whole World Bank Group, or ADB, a lot of them are actually funding projects within the green building space. So this is to give you an excellent example of that. Now, green bond issuance in billions that's how it is kept up over a period of time. Now, again, the 2025 data is come, but if you see over, there's been, according to this database, 2021, where it was leading, and in 2024, it went down a bit. But it would sort of, I feel maybe outdo what it did last year. Now, when we talk about social bonds, what we talk about that? So they are going to be in positions which are focusing on the less privileged section of the society or underserved section of the society. It could be affordable basic infrastructure, clean driving, water, sewers, it's various example, access to basic services like health, education, vocational training, healthcare, affordable housing, so job creation. Uh, Affordable housing is like being predominantly various use. Now, there was a question about microfinance. So, like this where microfinancing could be a huge example taken. Then you could be targeting underserved, marginalized people, people who are living below the poverty line. Then you could follow the social bond principle. So the social bonds have to be following voluntary guidelines, but they have to follow the social bond principles. Now, if you look at the issuance of social bonds, it has gone down. You see, during the pandemic and stuff, it was like one of the major issuance. But then over a period of time, it has, I won't say that sort of gone down, but stabilized at a bit, which is less than 2021, stating that this still remains one of the most critical sectors within the ESG space. So it's not only climate, social is where a lot of things are getting funded. For example, people are funding affordable housing projects in Korea, which is like one of the in 2001 of the years, it was a major impact where they were actually focusing on this particular area. Now, when we talk about sustainability bond, this is the other type of bond which I talked about. They finance or refinance projects in environmental and social sectors. They follow sustainability bond guidelines. They could be sort of within both this space. This is again to sort of give you a fair bit of an idea of the issuance over a period of time of sustainability bond issuance in billions of dollars. Now we come to sustainability linked bonds. Now these are actually sort of a bit of a different bonds. This is one of my favorite bonds. There's sort of general purpose, 4 or 5 core components. One is like key performance indicators, calibration of sustainability performance targets. So they are calibrated to sustainability performance targets, which is SPTs. They have got KPIs. They've got bond characteristics, which is like variable coupon rate, differential tenure. So this is how they sort of could come out depending on how they are able to reach those KPIs. Just to give you an example, like let's say, which we'll see in front, if we are able to become more efficient, then maybe you can reduce your variable, your coupon over a period of time. So that's reporting and verification. So these are something which is very constant. Now, when you looked at by the KPI theme, this is how the distribution is. Environmental, multiple themes would lead, but then environmental will be the would be the largest theme in this. Of course, others being social, and then you have others. So when I talked about ESG bonds, how are they different? Why is this a separate segment? Because they incorporate governance considerations and can take various forms. Again, as long as they are relevant bond, follow the relevant bond principles, they could qualify as sustainable linked bonds, or they could qualify as sustainability linked bond principles. So these are different depending on which type of uh, principles they follow. They could be in these two particular kind of bonds. Now, before I go this case study, I just wanted to stop here and check if everything is people have understood. If you have any questions, then we look at a case study. Anybody has any questions? Okay. Now let's look at this case study, and I want you to this again from the book, and I would like you to read it and understand. So you could take time, go through it, and then I'll explain you how this. So this is an example, classic example of sustainability linked bond case study. This in this case, I've given about so period of 2 years, and they pay the bond pays a variable coupon, like I talked about, and these are linked to some of the performance targets. In this case, it's sustainability performance targets. So the company sets key sustainability benchmarks, like it could be like in this case, use of alternative energy in operations, or improving operational efficiency annually. So just to give you an example, this could be anything. So company could take whatever bond principles and then come out with those targets. And in this case, like I talked about, it's alternative energy and operational efficiency. These are the two things. They have the KPI set in year one and year two to propel these going forward. And they have come out with the thing. So this case study has been inspired by Enel. Enel is a German company, or a Swiss, it's a European company, which is one of the largest of its kinds, which comes out with these sort of bonds. So it's in this case, I have kept the coupon rate as variable. Coupon rate is the interest you pay on the bonds. If the company achieves the target, let's say in year one, it's going to pay a reduced coupon rate of 100 basis points, and then there'll be another reduction of 15 basis points in year two. So why you do this is because you are bringing in accountability, you're bringing in transparent, making it more transparent, you're making it objective and target driven. That is, okay, if I achieve this, the investors want, okay, this is if you come out and you can quantitatively measure what you've delivered, then there is an incentive, and this incentive is that the company is going to pay less interest rate on its bonds or its outstanding bonds. So this is where you can understand where the performance of a company, which is known as the key performance sort of indicators, which it's aligned towards, is measured, and how it's rewarded if it's going to consistently get or achieve those area target areas. Now, if let's say the company fails, then it will pay a coupon of 3%, which is it paying. It could pay an additional 5 bips in order to in year two if it fails against the benchmark. Now, this is a system where I've actually designed it. A lot of bonds are not designed like that. I've sort of given it a bit of a twist. This is known as a step up of step down bond structure. A lot of people who work in finance, who worked in international private banking, of course, Carl and other people would be knowing. This is sort of aligned towards a step up or a step down bond structure, and where the coupon rate is like variable with key performance. So coupon rate or the interest rate is always paid on the outstanding principal amount. Now this gives you a coupon payment pathway over 2 years. So let's look at the two scenarios. If the coupon rate is not met, so you pay 3% in the year one on the outstanding amount. Let's say the outstanding amount is 100 million. You pay a coupon rate or interest rate of 3%, which is about 3 million. Now, if you do not achieve your target again in second year, you're going to be paying 3.05. Now, let's look at the other way. If you are not going to be, you're going to be achieving your targets, you're going to be paying interest rates, which is going to be less than 3 million. So here it's like 2.9, so 2,090,000 would be the value. Then if you again achieve your target in year two, you pay 2.85. So in this case, you can see the differential of payment in the interest payment which is given out to the investors. So this brings in not only accountability, sort of this is something which the corporate should love to do, because there is an incentive and there is a reward being incorporated, and this sort of innovation is being used by companies so that they can go to the capital markets. They can there's a lot of demand for these sort of bonds. It's actually oversubscribed, and in this way, because you get very high on ESG ranking, a lot of investors would like to invest only in companies which are going to be particularly in this particular space. So just to give you an example of particular this particular type of bond. Now, I have any questions. Did people come? This is a very good example for you to understand and come out with an question. Yeah, sure. Please go ahead.
Hi, thanks for all the information. And it's not a question specifically related to the case study, but it's more about, obviously your knowledge in this space is very deep, and it's a lot. And I think that for a lot of organizations trying to figure out how to figure out this, and so it was really interesting to hear graphs of how much has changed if you kind of look over the years and where we're at now. I guess kind of two questions. One is, what's your advice of kind of for organizations being able to access this? Because a lot of these look like, especially if you're looking to work with governments and things, like how can organizations at a mid-sized level or through a consortium, or what is the best way to really, these make a lot of sense. Like if we look at social impact bonds, we're seeing more in that space. Like what's your advice for organizations to really be able to access these, and also to really be able to navigate them? Do they need to have a consultant or a partner like yourself in the project that really helps understand all the technicality that comes with these different funding instruments? Thanks.
Okay, fair. That's a fantastic question. Now, you can always have an expert. That's always good to have an expert and a second opinion, because there could be various kinds of experts you do depending on what type of instruments you're coming out. Now, coming to your question, the first part of the question, what sort of, it depends on what exactly. You see, a lot of people are tapping the capital markets depending on how mid-size you are. Usually, if you are abroad, the capital markets are very deep. You can easily go out and reach to the capital markets and raise funds, showing that you're particularly targeting certain environmental rules. So this could be done in a way you can come out with any of these bonds. Either it could be a green bond or social bond or sustainability linked bonds, which is highly used predominantly by corporates, whereas green bonds also is used by corporates, but it's also sovereigns and multilaterals. So this is one way of doing this. The other way, it depends, is like you could go through the microfinance route. Now there are a lot of community based funding which I talked about. Let's say if you're doing a project, so if microfinance could be a very good part where you raise funding. Or if you, let's say, have a startup or an enterprise which is actually looking at both social and financial return, then you could go out and tap impact investors. The other way is also grants. Now, grants are being made by all the corporations, even companies together, and they are also known as performance based grants. For example, Echoing Green comes out for different kinds of grants, for a grant for companies which are in the social enterprise space. So this is again one example of what you could do. So it depends again. For example, I interviewed Shilpa Popele, one of the companies in Pune, which actually tapped the bond market in London. So in a different way through impact investors. So these are sort of various ways where you could go. The other way which people are also using, although this is a bit expensive, is the social impact or development impact bonds. The reason why this is a bit expensive, because the legal or the other things to sort of put up this whole framework is a bit expensive, but it works in this way is that you go to a government, or if you're in UK or in Europe or America, you'll be actually going to a government, because it'll be a government should predominantly be funding. Although you could also have a investor which is actually a foundation, which is predominantly done in developing markets or in frontier markets as well. And then you can decide what sort of variable you're looking at to target as an intervention. For example, if you're looking to give affordable education, then what is the benchmark? Are you going to be using? It's very simple. Okay, how many students are able to get their degrees or get an education from the K-12 school? One could be that, or what could be their daily attendance? So this could be one part of, just to give you an example. So there are various ways which you can use depending on what sort of an entity you are, or what sort of funding amount you want to raise. If you're not going to be raising a huge amount of money, then impact investors could be a great idea if you have a sustainable business. But if you want to go to a bond market and you want to raise a sizable amount of money, which you're going to be using for a long period of time, specifically projects which are ranging between 5 to 10 years at least, then going and using capital markets for sustainable bonds would be an excellent idea. If you are going to do something which is highly exotic, you could always have blended finance, which is like IFC. You can go to multilateral. Multilateral will get an impact investor or a private funder, wherein so there are various things in these. This is known as first loss guarantee, wherein if there is a first loss, it will be absorbed by the multilateral, so that the private investor is able to invest in. This is how they are sort of. For example, just to give you an example, IFC is leveraging around 7 to 8 times of amount of money which uses in the private sector. So it again depends on what size of the funding you're looking at, what stage you are in, what different kinds of projects you are. So like performance grants, you can go with various kinds of to various actors. It could be impact investors, multilaterals, foundations, even corporates. Corporates nowadays fund a lot of within the ESG space. In India, you have to anyway fund a part of your revenues within this space, and globally, also a lot of top companies are investing projects. Am I able to answer it?
Thanks. That's helpful. I guess one follow-up question, is there any, because like everything you just said about which type and the amount varies and what would be the right instrument, is there any kind of resource you can point us all to that helps break that down to make this information more accessible for people to start? Because we see this innovative financing, it's going to keep continue, and we're going to continue to see more models, etc. So I'm just curious, either in your book or in if there's other resources you can direct everyone to that can help kind of break that down and be a quick reference guide to kind of guide people to which mechanisms are most suited to what.
Yeah, you could refer my book. My book has got a detailed on this, although it will not exactly say which part, but you will get to know all type of social financing mechanics, almost all of them. I won't say all, but it is very comprehensive. You could always contact me. I don't know exactly if there's sort of a reference which directly it tells you whether what you should use, but OECD comes out with a lot of reports. So OECD, IFC, these are ADB banks. They come out with a lot of research focused tools. So that is another one. OECD and World Bank have a database. You could also use that as a part of it. So that would be another one. But I think my book, although it's written in a non-fiction style as love story, I was in the US, sort of a fiction love story, but I mean, it answers a lot of questions. It goes on carbon pricing, how it was implemented, structured finance, structured products, how structured products are being used. Because these are things which you need not look at it. It's not for you. It's more for multilaterals, how they are going to be collaborating. From your side, it would be more into how performance-based grants, who are giving performance-based grants, what is impact investing, what could be microfinancing tools, or if it's mid-size, then certainly it will be sustainable bonds, another way to tap the capital market. Okay, great. I'll just have one follow-up slide, and then we can again go back to questions. So this is the final thing which I wanted to. I really thank you for the lovely questions. It was fantastic. You asked, and I look forward to more. And first, I'll just share this particular slide. And so renewable energy is committing to achieve social outcomes. So just to say which side of bond it is. So this is again an example of sustainable linked bonds, because they are trying to focus on and they are linking their outcome with the interest payment, or how lower coupon payments are, how it's linked to the coupon payments in the bond. So this just sort of give you an example of a quiz. And of course, like I told you this about the book, it's available on Amazon, Flipkart, Barnes & Noble, Co., others in various ways. You can always go and buy it. These are some of the recommended reads, I would say, which you could read. I've also given some of the reads from my startup, The Middle Road. And yeah, I mean, I would love to answer any more questions which you can have. Yeah, I think the recording is going to be is already being done by Catalyst now, and it will be available.
Yeah, we'll share the recording on YouTube probably next week.
Okay, so this is from my end, and I hope I was able to answer all the questions. So anything else, I'm ready to answer. Yeah, sure, Simon. Thanks a lot. I really appreciate that. If you don't have any more questions, I think then we are done. I hope the presentation was not very. I mean, it was very detailed, but I hope it wasn't too heavy for all of you. Okay, so fine. So I think we can quit the session now, or if you want, you're welcome. If there are any questions, otherwise, no. Carl, you have any question? You usually, I thought, would ask me a question because it comes within your area of focus from an investment side. Okay, so I think that's done from my end.
Great. I'll just share this closing slide. Yeah, we just ask you to please share on social media. You have our Instagram, our YouTube, or the YouTube. You'll be able to find the recording of this session probably next week. And you can find us on basically any social media. But yeah, thank you, Nishant. Thank you for joining.
Thanks a lot. Thanks, Jill, and thanks everyone. I really appreciate this. Thanks to first Catalyst Now team. I think you've been wonderful. I really appreciate the opportunity you gave me to speak about. I'm very grateful, and I think this could be the start of a number of sessions which we have together. And I want to thank everyone for joining. Thanks a lot.
Thank you,
Thank you.
everyone.